And great to welcome back to our show Kevin O'Leary, chairman of O'Shares ETFs and Beanstox, and as well, you know him as one of the sharks on Shark Tank. Kevin, great to talk to you again.
Great to be here. Thank you.
What's your reaction as we head out of 2020 and head into 2021? How do you surmise from a business perspective what this year has meant for you both personally, but also for the country as well?
Well, obviously, like everybody else, I'm glad 2020 is over. It really was a remarkable year in a lot of negative ways, but also forced what I call the great digital pivot. What might have taken 5 years occurred in 6 months, and you saw that, in behemoth companies, Nike's recent numbers, this incredible move to a third of their sales direct to consumer all around the world, less reliance on retail, higher margins, higher productivity. Higher return on assets, all of this occurring at a time when we're in this horrific pandemic where people are losing their lives. I mean, it's just incredible in both directions. But I'm extremely constructive for what's going to happen to our economy over the next 2 quarters. Some really remarkable positive outcomes, particularly in the sectors of healthcare, technology, and the consumer. And that's sort of where I'm making my pivot in asset allocations. For the first time in my life, I've significantly reduced my exposure to commercial real estate. It's freed up a lot of capital to redeploy in those sectors I just mentioned.
So let's touch on a couple of those if we can, because healthcare has been an area that we've obviously seen a lot of hiring in the last 5 years or so. And the expectation is that the digital piece that is now really driving a lot of what we see in healthcare is just going to continue to do so in the next several decades.
Well, it's not just that. You have to think in fund flows. Billions of dollars are going to be redeployed for medical, what I call infrastructure, because we're going to repatriate medical supplies, generic drugs, manufacturing capabilities to Puerto Rico, US, Mexico, Canada. There's not going to be anything of this concept of just-in-time inventory anymore in the medical space. It'll be just-in-case inventory. And that means stockpiling for COVID-20, COVID-21, whatever else is coming down the pike. This permanent change in the focus of readiness in the medical space is a huge opportunity for investors. So whether you go into biotech or mental health or all kinds of different derivatives, my highest returns in 2020 were actually not in technology. They were in biotech in a company called MindMed, where I'm up 1,700% year to date. This is, the legalization of medical research around psychedelics for medical health, mental health. And, we saw in the election, November 3rd, legalization of psilocybin research in Washington, D.C. and in Oregon and et cetera. MindMed has a plethora of molecules in multiple trials with the FDA now in LSD, psilocybin, a compound called 18MC, and combinations thereof. So, and the markets recognize the potential of solving for opioid addiction, depression, all kinds of anxiety, all these issues that we've ignored for 37 years. So there is a lot of upside in healthcare coming.
So let me also touch on consumer and where specifically you're looking in that area, because obviously retail had has had a rough go when you're talking about infrastructure and the in-store activity. But as you alluded to, e-commerce is driving a lot of what we've seen during this holiday season and what we're expecting to see driven over the next several years.
Yeah, I mean, this remarkable pivot, I've got, over 50 private companies, primarily in consumer goods and services, and the ones that are involved in industries like the wedding industry, business, travel, sports arena, food services, they have not come back. But the other 80% have done the digital pivot and started to sell product direct to consumers. I have a company in Fargo, North Dakota, that sells gym equipment. I think we're 4,000% ahead of where we thought we'd be on free cash flow, and greeting cards out of Boston and things like that, where they're selling direct to consumer now, where they never have before. And so the consumer is also going to get recharged with another stimulus package, maybe multiple stimulus packages. And so all of these checks that are being sent out to everybody, regardless of whether you agree on the amount or not, is going to come back into the economy, which I think is a good investment thesis for 2021 in backing the consumer companies.
So for a couple of those that you just mentioned, weddings and arena food service, the expectation you have is that those are going to come back at some point. It's just maybe taking a longer period of time than some other sectors.
Well, I'm not sure anymore. And let me give you an example. I have many businesses that support business travel entertainment. I had a meeting last week with, let's call it the world's largest retailer, with a new product that we're rolling out at their request. A proposal they wanted for 3,600 stores. Normally, I would have flown to that meeting. So would the CEO, so would the sales staff, out of respect for the size of that order. We did that by a Zoom meeting. I asked my accounting people to tell me what we saved, $37,000. And that's going straight to the bottom line. And when I asked the buyer, because she had an extra couple of minutes for me, I was interested from the investment perspective, how her day had changed and what her plans were for 2021 and meetings going forward. And she said, basically, she's now 30% more productive because she's doing 18-minute Zoom, 5-minute break, 18-minute Zoom, 5-minute break. She doesn't want people to fly to headquarters anymore. She doesn't need them to. So those businesses that are servicing, that I was involved in, business motels, the places where you get the free breakfast and you stay overnight for your sales meeting, I don't think those are coming back anytime soon. And in my own budgets, and here's something to realize, which I now have clarity on for Q1, Q2, we have slashed business and business travel and entertainment by 20 to 50%, depending on which company. Average savings 27%. That's happening all over the S&P. Airlines, 2 of them are going to have to go bankrupt, in my view. I do not need them anymore. I will not use them. They may be optimistic that they're coming back, but not for business travel, not anytime soon.
So you just mentioned, in speaking with the executive that you had talked with, the difference in what the workday is, and the expectation for a lot of people now is that it's changing. You and I are doing this interview. You're at your house, I'm at my house doing this interview, and the expectation is work from home is going to continue to be a piece at whatever level it's going to be as we move forward. And that, again, is going to change a dynamic in terms of the productivity that we have in the workplace, the type of day that we have. I don't think the 8 to 4 or 9 to 5 workday is going to be the norm anymore.
No, I actually have clarity on Q1, Q2 and budgeting for just real estate square footage. I have the nexus of my headquarters in New York, Florida, Texas, and California, where we are negotiating and in some cases litigating with REITs. We're reducing about 20% of the floor space requirement, primarily in the areas of accounting, compliance, and logistics, where that staff does not want to return to HQ, not now, not ever. They're raising children in the burbs, or they're taking care of elderly parents, or in some cases, they want to move into the rural regions where they prefer their lifestyle. And for those jobs, we have no problem with that, but that's a further 12% reduction in our costs if we're able to close out in Q1 these leases. And so when I take that into account to the 27% savings in business travel, most of my companies, when optimized that are private, make 15% pre-tax. So if I'm doing 100 million, I'm making 15 million pre-tax. How about I told you I have some situations I've now budgeted to 18% pre-tax with the savings around square footage of REITs in office and on business travel. That's a 20% enhancement to free cash flow. That's why the market's so buoyant right across the S&P 500. There's a lot of this going on. America 2.0, digitized America, is a very productive, high margin, high cash flow place.
I'll leave it there, Kevin. Thanks very much for your time. Greatly appreciate it. All the best to you in 2021. We look forward to talking to you again.
Take care. I've enjoyed it. See you again next time. Bye-bye.
Thank you. Kevin O'Leary, chairman of O'Shares ETFs, Beanstox, and also one of the sharks on Shark Tank.